Nicole Webb, I think we've figured out those technical difficulties. Nicole, I'm going to bring you back into this conversation, and maybe we'll start right there because I asked you what the next key catalyst was for this market, but we know tech has continued to dominate here. So what's your takeaway?
Yeah, the thing that I wanted to get across earlier was just this. We believe that the banks are going to kick off this earnings season in just a couple of, well, not even 2 weeks now, really strong. And we think we're going to get really great reports out of earnings season. And we do think that that is the next catalyst higher. When it comes to gold, though, this theme is really important, especially sitting on the wealth management side, which we do. Gold's move isn't speculative. I think it's really reflective of the backdrop for investors. We've had 5 years of extraordinary income and asset growth, and I think investors are looking for stores of value. So as you anticipate lower treasury yields, especially on the front end of the curve, with a backdrop of currency uncertainty, and certainly looking at the global banks looking to gold and lessening their U.S. dollar exposure, all of this is driving that demand for retention or stored value, which I think is part of that flight to gold. The really interesting thing, Morgan, to bring your two themes together, is that we're not seeing overly defensive equity positioning. And so we've seen some volatility in tech. We don't think that that continues.
Does gold continue to have legs here, though, especially when Goldman Sachs has basically upped its guidance, its price target for gold?
We actually do think it continues. We think with the amount of money in cash, because again, you're not seeing this fade out of equities into gold. You're not seeing an overflight to safety here. What we believe you're finding is people are looking for an alternative to traditional asset classes, and they're looking for stores of value. So the wealth that's been created over such a short period of time, where else can I stick it? And right now they're choosing gold over other proxies like land.
But, Nicole, finally, if you're an investor who's trying to do the right thing, you've been pretty much fully invested, you've ridden the market up to some pretty strong gains, and you want to diversify, how do you do that when it's not as if you can necessarily feel comfortable moving from equities to gold, or even necessarily from equities to bonds in the way that you used to, because they're not moving in the same sequence that they have traditionally?
Yeah, I think with the wealth that's been created against a backdrop of really powerful concentration, this is where you're starting to hear diversification away from public equities and public debt markets into the private markets. And so you're looking for portfolio diversification away from the supply and demand concentration you find in public markets. And so you're finding diversification merely in the ways in which marks are managed and how business is managed, boots on the ground, versus the quarterly earnings and guidance that's delivered by public markets. And so diversification isn't necessarily finding an asset class outside of traditional business risk, interest rate risk, but instead diversifying how you're investing and how you're placing cash into various parts of the market cycle using illiquid investment vehicles like private equity, private debt.